In this video, you're going to discover a few simple things that you can do to optimize your Forex robot or expert advisor to make more money. So if you're somebody that's currently trading with a Forex EA or you're considering trading with a Forex EA, they would like to know how you can change a couple things to optimize your expert advisor or robot to make more money, then make sure you watch this entire video. I'm actually going to be interviewing a gentleman who I believe has created some of the best Forex robots on the market, and he's going to be explaining his entire optimization process, which is mainly the reason that's allowed him to create these incredible EAs that are getting results unlike anything that I've seen before. He's somebody that leads the research and development team. He also is somebody that has been trading with EAs for about 5 years, and he manages a team of developers. So the insight that you're going to get is incredible. There's a couple really easy things that you can do to make more money with your EA. So make sure that you watch this entire video. All right, Joe, thanks so much for being with us here. Like I mentioned, Joe's somebody that's been working with EAs for the past 5 years or so, and he is a master. He's developed, I would say, one of the best Forex robots on the market. And what he's going to do is he's going to show you a few different ways that you could take any EA that you're trading currently and show you how you can optimize it to make more money with your existing EA. So Joe, thanks again for being on here. Why don't you go ahead and dive in and talk about some of the ways that people could use their existing EA and actually make more money from it?
Yeah, absolutely. Thanks so much, Adam. And yeah, I mean, I would say first and foremost, you need to have a data-driven approach. This is really important. And it's actually one of the main benefits of using an EA is that, it's a robot. You don't have to have your emotions involved, and you can back test it algorithmically to get really good data and understand sort of what you can expect from your system. And, two really important psychology things when trading the markets is number one, to have a probability mindset. And then number two is to have a carefree mindset. And so the first one, a probability mindset, that's really important because otherwise, I've seen a lot of traders who, whether they're trading in EA or manually for that matter, they'll just kind of go based off of, this seems to work well, right? You hear that a lot. Or, I feel like this is a good trade. Or I think the markets are going to do X, Y, or Z. Right. And the reality is nobody can predict the markets. And oftentimes, at least I found this myself, what seems to work often doesn't actually work. And unless you have data to back it up, you really can't be sure. And so, in that case, you're really just gambling, to be honest, to be frank. Right. And we know what happens to gamblers, right? They always lose. And so the whole point of optimization when it comes to optimizing an EA is to gather data, is to know your numbers. And that way you can know your probabilities for success. You can know what to expect. And that helps you have that carefree mindset that I also mentioned. Any trading system is going to have a losing period. That's just part of this game. But if you know what to expect, you have data to back up your strategy, you can be confident during those losing periods and come out of them and then overall be able to execute your edge and make profit in the end, right? So I guess just kind of going back, when I first started getting into trading with EAs, I used MT4 originally. I think most people do. It's probably the most popular trading platform out there. And it's popular. So you just kind of start using it and it's relatively easy to use. There's a lot of information out there about it, but it's definitely not the ideal platform for EA optimization. Well, I'll say there's a couple reasons why MT5 rather is preferred, at least to me. The first is variable spread. Okay, so hopefully users watching this understand what spread is. So the reality is in the markets, right, there's the spread, right, the difference between the actual price and the price that your broker is, helping you get in the market at. And when you're testing on MT4, they only have what's called fixed spread. So it's just one steady spread the entire time over the course of your back testing. right? Whereas with MT5, it's variable, which is much more realistic. That spread is constantly fluctuating in the live market, and MT5 mimics that exact fluctuation. And that actually brings me to another point where MT5, you can use real tick data. Okay, this is really important because we have different modeling types. In fact, let me share my screen here and just kind of show you a little bit what I'm talking about. All right, so real tick data. Okay, that's another huge advantage when testing with MT5. What I'm talking about is this right here. This is the modeling type. So just to show you where I'm at here, if you go to tools, actually no, if you go to view and you click on strategy tester, then this window will pop up and you'll see what I'm seeing. You might get this pop up first. You'll just click single, then come here to settings and you'll have this window here. So real ticks, that's essentially the exact price feed of what happened in the live market. And again, this is something that MT4 doesn't have. So when we look at a chart here, we can see price moving up and down, right? And each little movement in price is a tick. I don't know if you see these numbers here moving. Hopefully you can see that. Can you see that, Adam?
Yep.
Moving up and down, right? Each little movement up and down, that's a tick, okay? And so on MT4, what they're using tick data, okay? We always want to use tick data because that's the most high quality data. But there's different options when it comes to tick data. And in MT4, the only option is every tick. Whereas in MT5, you can use every tick based on real ticks. And so what's the difference? Well, the difference is every tick is just using an algorithm to essentially produce these ticks. Okay, so when we look at a candle here, right, we've got the open, we've got the close, we've got the wicks up and down, right? How do we know if it opened here and then it went down first before going up? The only way we know that is by looking at the actual price feed. And on MT4, we don't have that. They're just using an algorithm, a very sophisticated algorithm, mind you. So it's still good data, to backtest on every tick, but it's just an algorithm. And they're just kind of using this algorithm to predict, okay, it probably went here first and then down here and then up here and then up here and then finished here. Whereas with real ticks, we know exactly what happened. It's using the broker's price feed that they store, basically the data that they store on these ticks, and it produces exactly what happened in the exact order that these ticks were produced to form these candles.
Every tick, real ticks, that's the best data quality.
That's the best data quality. That's the point. And that's only offered in MT5. Now, the one thing about real ticks is that it's going to vary from broker to broker because every broker has their own individual price feed. So that's just something to keep in mind, is that you might get different data using real ticks based on the broker. And that's because brokers have different price feeds, but that's okay. I mean, if you can use real tick data for the broker that you're going to be trading on, that's going to be the most precise, accurate data. And that's what we're after, right? When it comes to optimization and backtesting, we want to have the most accurate results as possible. So I would say, speaking of that, data quality is king, and that's really most important. In fact, I had some slides here prepared, some images I wanted to show you guys to kind of illustrate this. So data is king, right? If you don't have good quality data, then your results are basically worthless because they're not going to be accurate. This is to show you some examples of that. Okay, this is a broker. I don't know what broker this is. This might be FTMO broker. And you can see here, we've got this huge candle. It's just way bigger than any other candles. Yes, this is at market open, but this is not what really happened in the live market. We've got huge wicks up, huge wick down, huge candle. I mean, if this actually happened in the live market, this has got to be some huge black swan event. FTMO traders would, basically run FTMO out of business if this actually happened, in the live market, because the reality is it didn't happen, and this would only have happened on FTMO's broker. But that's just bad data quality, and that happens. And it's not to say in live market the data is bad. This is just in the backtesting environment. You can see sometimes there's bad data, and you get charts like this where you got these weird wicks that are going, wicking super high, super low. No trading strategy would be able to handle this. I mean, this is just weird. This is just not right. It's just bad data quality. Here's another example. You can see again, this is not what really happened. So if you're finding that your broker has some of this poor data quality, I'll say that Alpari is one that I found is consistently high quality data that you can access easily. I know some people recommend like going out there and buying your own data, and you can absolutely do that. But what I found is easiest for myself and also for our users is just to open an Alpari account. You don't even have to be a US citizen to open an Alpari account. You can open it up and they'll create a demo account for you automatically. So you don't have to worry about registering. Again, if you're a US citizen, you can't register for Alpari, but you can just download their platform and it will automatically open a demo account for you. And so through their terminal, you can access their data. And it's high quality data. I haven't found any issues with it. And this is something that over years and years of speaking with tons of different developers who have even more experience than I do, one thing is consistent. We do a lot of our testing on Alpari data just because easy, accessible, and it's high quality and it's trusted. So if you're looking for a quick and easy solution to accessing high quality data, I highly recommend using the Alpari MT5 terminal.
So fantastic. So you're advocating that, hey, we should be testing on MT5 because they have the variable spread. They also have real tick data, which is the best type of data that is available. What do people do that are trading an EA on MT4? Do you recommend them, hiring somebody to convert it to MT5 so they can optimize it and make more money ultimately, or what?
Yeah, if you have access to the source code, I would definitely convert it to MT5 so that way you can optimize more accurately. If you don't have access to the source code and you only have the MT4 version, your best bet's going to be to use that every tick data, but just understand, you're only gonna be able to use every tick data and fixed spread, which just really isn't realistic. And so, take your backtesting results with a grain of salt. But in an ideal situation, like you said, Adam, I would definitely recommend switching to MT5 if you can.
So let's move on and talk about, I know you started talking about modeling quality and optimization period, and then talk about how do we actually go about this optimization process? I know you're going to do a demo and teach people how to do that, right?
Yeah, for sure. So that's the other great thing about MT5 actually is they have much better optimization. You can actually do optimization on the cloud where on MT4, you're just running, it's just slower, right? You're running one backtest after another, whereas on MT5, you can have multiple tests running at the same time in the cloud. And so it just makes it go faster, more efficient. So the way that you do that is right here where it says optimization. If I were to just run a single test, I could, and I would just leave this as disabled. But if I select, one of these options down here, then I'm able to run optimization, which I'll just explain really briefly here. Basically, what optimization allows you to do, it's really, really cool. It allows you to optimize different parameters. So let's say, for example, I'll uncheck these. I wanted to optimize my lot size amount. I wanted to see, okay, what's the best lot size amount for this strategy? Well, I could test anywhere from, let's say a tenth of a standard lot to 3 standard lots. And I could test in increments of, 0.25, for example. And so basically that gives me 13 steps or 13 tests, I guess we could call them. And it's going to run, 13 tests one after another and then spit out the results. And I'll be able to quickly see, okay, 2.5 happened to be the best lot size for this. It yielded the best results over the date range that I selected, right? Now you can also combine this with other settings. So let's say I wanted to combine that with my pip step amount. Okay, I want to know not only what's the best lot size, but what's the best lot size and pip step amount combination. And so I can do the same type of deal where it's like, okay, let's do a pip step amount of 10 all the way up to 30 in increments of 5. Okay. So
and for everyone, just to clarify, that means that it's going to do a test for 10, it's going to do 15, 20, 25, and 30.
Yes. And it's going to do a combination, every combination of these two settings. So it's going to do, it's going to test a 10 pip step with 0.1, and then a 10 pip step with 0.35, and then a 10 pip step with 0.6 and, all the way up to 3. And then it's going to do, 5 more than that, 15, same process. And then 5 more, 20, same, all of the lot sizes, 25, all the lot sizes, And so then I'm going to have this bigger list of results and I'll be able to see what's the best combination. Okay. It's a 2.5 lot size and 30 pip step, for example. And I can see, all right, so, that's the best combination here over, that date range.
I mean, this is so powerful because you could take just any EA and just by doing this, I mean, you can make it infinitely more powerful.
Yeah, absolutely. You can see what are the best settings for this particular EA or algorithm. Now, one thing I'll say, just a quick pro tip. Let's say that this was the result. Let's say it was that, okay, 2.5 lot size and 30 pip step is the best combination here. Well, 30 was the very top of my range that I was testing for the pip step amount. And so, I would want to run another test and I would probably change this to start at 30 and go even higher, I could see that it picked the top results, the max of that range that I defined here. And so I'd want to see hey, maybe even higher could do even better, right? I didn't know because I didn't allow it to go beyond that range, but let's test beyond that range and see if I can get even better results. Yep. And what you're looking for when doing this sort of optimization is you're looking for patterns. You're looking for ranges. Okay. If I can see consistently that having a bigger pip step is giving me better results, then, I could choose the very best value. Yes. But if it's I get one result with 30 that's really good, and then at 35 it's not great, and at 25 it's not great, I wouldn't really consider that a valid results. I would look for a pattern of, okay, the higher the values are, the better the results. Same thing with any variable, right? I'd look at these combinations. It's okay, so I can see that the higher the lot size and the higher the pip step, those kind of go together, and those, are giving me a better result than bottom. So I'm not so much looking for specific values per se, but I'm more looking for trends or, general patterns, right? Of what's produced. And that to me shows that I'm on the right track. If it's just, an outlier results that for some random reason, this combination is best, but anything close, to it is not that great, then that's really insignificant to me. And I wouldn't be very interested in that result. But if I can see obvious trends of what's working, then that is much more interesting to me. Does that make sense?
That's a really great distinction. Yeah, absolutely makes sense.
That being said, one other thing I want to talk about really quick is this idea of curve fitting. So, maybe some of you were thinking that as I was going through this, oh, this is a real easy way to curve fit. If you're over optimizing, right? If you're getting too specific, optimizing too many variables, and you're getting too specific, what I just talked about of looking for trends rather than specific settings can help with that. But also you got to look at the date range that you are optimizing over. So, this is not even a month, right? And so my results for this date range of less than a month is not going to be very significant. That's not a very significant amount of data, right? And so there might be some results, some combination of settings that happen to perform well over this small period, but I need to look at more data than just this in order to get a more, accurate picture of what's working. Now, what I've found is that there's, you don't want to overdo it either. I mean, if you backtest over the last 10 years, and this is what most people do when they first get started, this is what I thought when I first got started, is that the more data I can backtest over, well, then the more robust my strategy is going to be, right? Meaning, I can train this strategy, train quote unquote, right? This strategy over 10 years. And so that way it's seen 10 years worth of different market conditions. And so whatever is thrown at me in the future is likely to be, the system's likely going to be able to handle it because, it's probably been able to handle it over the last 10 years. Right. And logically that makes sense. And I'm not saying that doesn't work. But what I've found with that is just that when you backtest over such a long period of time, you have to be okay with long periods of drawdown or stagnation, meaning long periods of time where you're not making any money or you might be losing money. And that's just tough psychologically. Most traders have a hard time, accepting losses in the first place, let alone a series of losses, let alone over a significant period of time. And so what I found is much more successful is to optimize over a shorter period of time. And, that's just going to make it easier psychologically for you to stick to your system, because ultimately, if you can't stick to the system, then you're not going to be profitable anyways. It doesn't matter how profitable the strategy is. That's why we always say, it's not about having the best strategy in the world. If there was one best strategy in the world, everybody would just use it, right? And then everybody would be rich. It's about being able to stick to your strategy and continue to execute it over time in order to realize those profits. And so, by backtesting over a smaller period of time, like the last year, for example, instead of just the last month. I mean, I'm not talking that short, but or the last year. That's gonna make it a lot more, high performing, I would say, in the short term. But it's also going to make it so that you need to continue to re-optimize. You can kind of figure out what approach you prefer, but I just have found from a psychological standpoint, from a performance standpoint, I'm able to get much better results optimizing over a short period of time and re-optimizing versus over a longer period of time and just, hoping that my strategy works in the future. The nice thing about optimizing over a shorter period of time is that you're optimizing for the most recent market conditions. And, if the strategy's worked over the most recent market conditions, it's most likely to work in the future. And if the strategy stops performing, you notice that it's consistently losing, then it's just time to re-optimize. And market conditions have probably changed, and you can re-optimize over the most recent market conditions. And again, that's going to give you a more likely chance of performing, getting good results in the future. And so it's just kind of a more frequent optimization process, but in my experience, much more successful that way.
Very good. That makes a lot of sense. How about how do we make that, maybe speak really quickly on the scientific method about how do you know what you should test and whatnot? Yeah.
It's really a lot of trial and error, to be honest. And so, you talk about scientific method. I feel like a scientist doing this a lot of the time, because it is just like that scientific method where we just kind of say, hey, this seems like this could work well. Remember at the beginning, I talked about that, of how a lot of times we say it seems like this could work well, and then you go and test it. And again, I found a lot of the time what seems like it would work well doesn't. Mm-hmm. And when I go and test it and I put data behind it, it's like, oh, wow, that actually doesn't work very well. When you really look at it. But that's just kind of the process, is we just this could work. This is a good idea. Let's test this setting, or let's test this feature, or, what have you. And, we test it, we optimize it, just like I showed here with the optimization. And we gather the data, we analyze it, and then we say, hey, we make it a conclusion, right? The same scientific method, right? Just, did it work? Did it not? Okay. Rehypothesize, regather the data, reanalyze it, remake our conclusions, and just kind of, go that way. So it's a process. Yeah, it's really cool once you find something that works well.
Hey, and by the way, if you're enjoying this content and you'd like to learn more from Joe and actually trade with his expert advisor, go on over to www.propfarming.com. And lastly here, this has been awesome, by the way. Actually, do you want to do a quick demo or tutorial on how you could do this, for example?
Yeah, for sure. Let's just run a test in the tester just to kind of show you guys. So I'm not going to run an optimization. This could take some time. So that's pretty much it, actually. So you have two options here for optimization, right? Slow complete algorithm, fast genetic based algorithm. I probably use this one here. Basically, the difference is that the slow complete one is going to run every single combination robotically, whereas the fast genetic one is going to basically be like using a brain in a way to like determine what results are performing and like what's the next logical test that should be tested, right? Like what's the next logical combination based on how things are performing. So it's just kind of a smarter approach to doing the same thing. And it's faster, more efficient. So yeah, I'd recommend using that. And then as far as all of these, this is kind of what you want to optimize for. Balance max, that's typically what I select, just the biggest balance, right? At the end of the test is kind of what we're looking for. You could also optimize for the lowest drawdown. I think it'll give you the same results. It's just how they're sorted. Don't quote me on that. But anyways, I basically just select balance max. And then that's pretty much it. And then you would just click start and let this thing go. And, you have optimization results. This is where, once you start getting passes, what they're called, that's just a completed back test over, one combination of settings, then the result's going to appear here. And you can sort by profit, you can sort by trades, you can sort by drawdown, you can sort by whatever. These are the two variables that I'm optimizing. You can sort by those, and you'll be able to quickly see here, how the results are going. The other thing I wanted to point out here is you click on this agents tab, you can see, the progress, the status. So you can see, this core here. This is a VPS that I'm using. I've got 8 cores on here. They're all working simultaneously to run these tests. You can see this one here has got 51% of the way there to completing its first test. So yeah, I just kind of like to go in here and see the progress and how things are going. And yeah, we basically are just waiting for these results to come in. You can see I already got plenty of results to look at. And so we can see here, and I didn't configure my other settings. It's only going to go to a max of 110,000 and it's going to stop at a minimum of 90,000. So that's just based on the other settings that I set, right? But we can quickly see here and see, if we want to look at the lowest drawdown, okay, this got to that same 110 profit, but this was the lowest drawdown. Okay, well, that was using this 1.1 lot with a 50 pip step. Okay, interesting. And it looks like this 50 pip step is actually, the higher the pip step, the lower our drawdown in general, right? I mean, we have an outlier here, but we can see as the pip step goes up, we get lower drawdown. And so that's kind of what I'd be looking for.
Hey, the next thing that you need to do is to check out this video on the screen right now. It's going to explain to you how we passed over 300 different prop firm challenges, all using an expert advisor.